Welcome to Crypto Lion, where we give you the latest crypto news and the very best analysis. Kindly subscribe to our channel and turn on post notifications so that you'll be the first to know when we post new videos. Today we'll be discussing a topic that's in demand. It's the question on almost everybody's mind now: is Bitcoin starting a second dump? Of course, we all remember the dump in 2018. I don't think we can forget about that soon, so a lot of people fear history might repeat itself. Well, let's find out together if this is really another dump. Anyone who jumped on the Bitcoin bandwagon at the start of 2020 will likely be rubbing their hands with glee. Someone who bought 1,000 worth of the cryptocurrency would have seen that turn over 3,000 by the last weekend before Christmas, a return of 229% in less than a year. Trust me, that's a lot. During the same period, if the sum was invested in real physical gold, it would have turned into just a little above the same 1,000 that was invested. After a quiet 2 years since the dump in 2018, the cryptocurrency has been on a surge in the second half of 2020. Having initially seen the price fall to as low as $3,800 a coin in mid-March, when investors were dumping assets of all kinds in a mass sell-off in response to the coronavirus. By late December, it had reached a new all-time high of around $23,500, a more than 500% rise from its trough to a new peak. And equally as eye-catching as the raw numbers has been mainstream finance's changing view of the cryptocurrency, which has helped push Bitcoin to new heights. Glenn Goodman, an analyst and author of The Crypto Trader, said that Bitcoin has gotten the seal of approval as an investment from many of the biggest investors in the world and the biggest Wall Street banks, and this is the most probable reason why it has achieved the stunning bull run. He mentioned that unlike 3 years ago, when Bitcoin peaked at just under 20,000, that the run then seemed to have been driven by hyped everyday investors that were buying up the coins. Asset managers and banks are now diversifying their holdings, in some cases selling out of gold and buying into Bitcoin, although we should not forget that prior to this recent development, they were referring to Bitcoin as a gambling chip. Now the price of Bitcoin has increased a lot, and this has largely been due to three things. We can say they all start with the letter C. They are the coronavirus, central banks, and currencies. Goodman commented on the price of Bitcoin. He said that Bitcoin's price has tripled since the start of the year, and he wonders whether any of that would have happened in the absence of coronavirus. Before then, the global economy was doing fine, but the virus lockdowns put central banks in panic mode. The U.S. Federal Reserve started printing new money in unprecedented quantities in the hopes of giving their economy a jumpstart. What we can refer to as diluting the dollar is responsible for the downward pressure on its value. And as the dollar sank, gold and Bitcoin rose. A narrative of Bitcoin is a better store of value than the dollar became popular with some of the biggest names in finance. Tom Stelzer, a crypto specialist at Finder, said that Bitcoin has proven to be a valuable hedge, beating out traditional store of value assets like gold. Certainly, the idea of Bitcoin as digital gold certainly appears to have caught on. Grayscale, an asset manager focused on digital currencies, saw a record $1 billion poured into it between July and September, 81% of which came from institutional rather than everyday investors. Out of that $1 billion, $719 million was invested into its Bitcoin trust, which now has around $10.2 billion worth of assets under management and has returned 271% over the last 12 months. Incredibly, Grayscale has seen $2.4 billion invested in the last 12 months across all its funds, which also invest in other cryptocurrencies like Ethereum, and this is more than double what it had received in the previous 6 years. Stelzer praised Bitcoin, saying that it has now arguably cemented its place as a worthwhile investment thanks to a number of high-profile funds like Grayscale and MicroStrategy investing billions in the cryptocurrency, and that it has vastly outperformed traditional markets in 2020. As well as the perception that it is now an effective hedge against inflation, the view of Bitcoin as an actual currency which could be used to make payments has also been endorsed, thanks to high-profile backing from established payment providers like PayPal and Square. Goodman also said the fact that PayPal would let customers buy, hold, and sell Bitcoin within its app and use it to make payments from the next year was a really significant vindication from mainstream finance. He added that the move by PayPal will lead more companies to accept Bitcoin as payment. And even if they haven't driven its rise this time, casual investors have also climbed into the cryptocurrency to help push it over the top. Both eToro and Revolut, which allow everyday investors to buy and sell Bitcoin, also reported that they've seen big increases in applications and the number of customers holding Bitcoin around the time it hit a new all-time high in December. But after a stellar run in 2020, what happens next? The short answer is it's difficult to predict, as we're in unprecedented territory. eToro cryptocurrency analyst Simon Peters acknowledged in late 2020 that as we're now at an all-time high, Bitcoin is in price discovery mode, which means that we're heading into unknown territory. However, he predicted $20,000 a coin would be the new bottom and 2021 would see even further price growth. even if it may be a bumpy ride. That's something investors who saw their holdings lose 12.5% of their value overnight in a flash crash a few weeks ago are no doubt already familiar with. He added, in 2021, a key theme will be the increased crypto investment from pension funds, hedge funds, and listed companies. Companies such as MicroStrategy and Square have been adding Bitcoin to their balance sheets. Simon also said that if inflation begins to creep up or we continue to see significant monetary stimulus from central banks, then we would expect this trend to accelerate. However, not everyone is convinced. Bitcoin still has no real underlying basis for determining how much it's actually worth. Its value comes from its finite nature as well as from sheer belief in it. And it's still not the easiest thing to find a day-to-day use for. Stelzer was quick to mention the ongoing issues around the cost and spread of Bitcoin transactions, which means it's still not a great payment option. He added that there's still question marks around what exactly its role will be in the future. And of course, some believe that the cryptocurrency's future can be seen in its past, when it boomed in 2017 and subsequently went bust shortly afterwards. Bitcoin's record rally could hit a wall in 2021. Miller Tabak chief market strategist Matt Maley had predicted something related to a dump when he said that he noticed signs on the cryptocurrency's technical chart point to a 25 to 30% sell-off that's likely to hit early in the new year. Bitcoin broke above the $23,000 level for the first time in December 2020, building on a massive 215% year-to-date rally. Maley said that there's no question it's been a melt-up, and it could last a little bit longer. He also said, I think on a short-term basis, it could continue a little bit longer, and I'm very bullish on it on a very long-term basis. But in the intermediate term, I'm a lot more concerned than I think a lot of other people. He also considered the relative strength index, which was just above 88 then. That's not quite up to the 90 level that it reached twice in 2017, but those were followed by declines of 36% and 64%. He said, we're not quite there yet, but as the pandemic starts to fade a little bit and maybe that liquidity becomes a little less plentiful, this stock could get clobbered like it has many other times in the past. He noted that just since 2016, Bitcoin has seen 10 declines of 20% or more, 7 declines of 30% or more, and 4 declines of 48% or more, adding that investors shouldn't underestimate its pattern of volatility. He warned people that they need to be careful as we move into the new year. He loves the long-term idea, but he thinks it's going to be a much deeper sell-off than the 10 to 15% ones we've seen more recently. He predicts up to 25 to 30% dumps, and he thinks it's going to happen early in 2021. The beginning of 2021 came with its own surprises, with new peaks and an all-time high of about 42,000. This followed quickly by some corrections, which is sparking questions about likely incidents of a second dump. Let's take a look at the charts and do some analysis. This chart shows the Bitcoin daily chart. In this chart, we can see some analytical features to be considered. Notice the area tagged main support value area, which is around the 20,000 mark. It's represented by the blue dotted line. Notice the other subsequent support lines at around 24, 27.5, and 32,000. They're all significant prices which are expected to offer some support to the Bitcoin price in the case of a dump. The resistance line is set around the all-time high mark at 42,000 and is expected to resist a bull run past that mark into what seems like the main resistance area or predicted new peak at around 45 to 50,000. You can see that it's represented by a similar rectangle as the main support area. This analysis projects a long-term bull run to 45,000 mark or beyond. So like we always warn, it's important for you to do your own research and remember that Bitcoin is very volatile. You should be very careful when trading or investing in Bitcoin to avoid incurring great losses. Thank you for watching this video. We hope you like it, and please click on the thumbs up button to like our video. Also, please subscribe to our channel if you haven't. As you can see, we have amazing content, and we'd love to share more with you. Kindly spread the gospel and turn on post notifications. You don't want to miss our next post. Good luck and happy investing.